A troubled tech stock is now turning heads on Wall Street. In today's cover story, Michigan remains divided over union rights legislation, how one signature could affect millions. Plus, from retail giant to bankrupt and broken. A look at the rise and fall of Circuit City, how top techniques used by wealthy Americans turn into big deductions on taxes, and how companies are tracking smartphones to learn how to advertise to your children. First Business starts now.
You're watching First Business, financial news, analysis, and today's investment ideas.
Good morning, everybody. It's Tuesday, December 11th. I'm Angela Miles. In today's headlines, the market is still looking for progress on avoiding the fiscal cliff. President Obama and Congressman Boehner met at the White House. Stocks inched higher on the news, with the Dow and S&P 500 near 5-week highs. Selling in Apple once again held back the Nasdaq. Gold was up and oil was down. A two-day Fed meeting starts today, with the Fed most likely talking about stimulating the economy by purchasing more Treasury bonds to keep those interest rates low. The government is selling its remaining stake in AIG, and reports say regulators have a $1.9 billion settlement with HSBC. The bank is accused of laundering money for drug dealers and terrorists. John Brady of R.J. O'Brien joins us now. And John, are you seeing any special positioning ahead of the Fed?
Well, we have, Angie. Over the course of the last 2 weeks or so, we've seen equity markets continue to melt up, as traders would say, continue to be sort of supported by this idea that the Federal Reserve is going to continue its method of quantitative easing. You know, the Fed meeting does start today. However, we'll receive the announcement from the Fed tomorrow, perhaps right around 1 o'clock or so Wednesday. But the idea is that risk assets, both equities and metals, commodities mostly, continue to melt higher, with the idea that the Fed is going to continue to monetize its debt and supply excess reserves to the economy.
What about tax management?
Yeah, we've seen two big trades, really, Angie. First, last week, gold came off about $50 an ounce. It was rumored that hedge funds specifically were exiting long positions ahead of year end to meet both investor redemptions as well as a number of other tax-related issues. Secondly, the corporate bond market's been very busy over the last couple of weeks. Corporates are issuing debt at record low yields, turning around and using that capital to pay out special dividends to shareholders. Costco and Home Depot have been two specific names who've used that capital structure arbitrage in order to reward shareholders ahead of year end, and we may see a bit more of it in the next few weeks.
Good to have you on the show. That's John Brady of R.J. O'Brien. Thanks.
Thank you.
Lawmakers in Michigan are on the verge of handing organized labor a defeat in a state where just 20 years ago, more than 1 in 4 workers were union members, but that membership has since declined. Our cover story looks at Michigan about to become a right-to-work state. Both houses of Michigan's legislature have passed bills that would prohibit employers in Michigan from forcing workers to join or support a union as a condition of employment. After wording differences are reconciled, Michigan's governor is expected to sign it into law.
One of the arguments is that if you pass right-to-work legislation, you make it friendly for businesses and you get extensive business investment.
But protesters, such as nurses, hope to discourage the governor from signing the legislation.
Things that we have, like safe staffing levels, adequate rest periods between shifts, those kinds of things would often be gone if we didn't have collective bargaining.
The pending legislation comes as Daimler announced it would make a $100 million investment to build heavy-duty trucks and other vehicles at the company's Redford facility in suburban Detroit.
You are seeing millions of dollars of investment in a completely retooled and reinvigorated automobile industry. So that sort of disproves the argument.
I think, you know, a one-time wonderful deal is great, but you need lots of one-time wonderful deals. Capitalism only works when it's continuous.
Monday, President Obama, who won re-election with United Auto Workers and other union support, toured the plant where Daimler would build axles, transmissions, and engines. He has opposed right-to-work legislation and was expected to meet with Governor Snyder.
What we shouldn't do, I just got to say this, what we shouldn't be doing is trying to take away your rights to bargain for better wages or working conditions.
What happens to auto workers if Michigan becomes right-to-work? Well, perhaps not much, according to the Center for Automotive Research. The center's labor and industry group director says in an already organized plant, they are used to paying dues, but I don't think there will be a mass exodus. If Michigan becomes a right-to-work state, it would be the 24th state to do so.
3,100 jobs may stall out at a GM plant in Germany. The U.S. automaker is out with plans to stop making its Zapharis at its Opel division in 2016. GM, however, is considering other options for the factory to stymie those job losses. The car company is attempting to put the brakes on its losses overall in Europe. The plant shutdown becomes the first for Germany since World War II.
Italian bond yields headed higher following news that Italy's Prime Minister Mario Monti plans to resign. Monti's reign will come to an end in February following passage of the 2013 budget. The move raises political concerns over Italy in the midst of the Eurozone crisis. Monti has been credited with keeping Italy's debt crisis under control.
The Japanese economy has some gross domestic problems. Japan's GDP has contracted 2 quarters in a row, signaling recession. A recent territorial dispute with the Chinese government and struggles following last year's tsunami continue to hurt Japan's export market. An election next week in Japan could have a large effect on fiscal policy.
Reports say Delta is close to landing a deal that will give the airline a 49% stake in Virgin Atlantic. Bloomberg reports talks between Delta and Singapore Airlines, which is looking to sell its stake in Virgin, are advancing. The deal is estimated to cost between $300 and $500 million. It could mean a step up for Delta's business due to Virgin Atlantic's high volume of premium passengers.
Apple and Google reportedly are forming a rather odd alliance. The two rivals are making a joint bid for a bundle of Kodak patents. According to Bloomberg News, the combined bid is $500 million. Kodak could get an $830 million loan to get out of bankruptcy by selling its patents.
Holiday hiring is on track to set a record this year. Retailers have added more than 619,000 jobs in the last 2 months, up 19% from last year. Now, if just 140,000 more people are hired this season, it will break a record set in 2000 of 760,000 hires, the most ever. Stores are bulking up staffs to stay open longer. Macy's just revealed last week that it will remain open for 48 hours straight the weekend prior to Christmas.
Apps on smartphones and iPads may be spying on your children. The Federal Trade Commission found that most mobile apps for kids are secretly collecting information such as phone numbers, locations, and other private information without parents' knowledge. The FTC study shows how interactive apps purchased through the Google and Apple stores could share ID information with advertising networks or even third parties that build profiles based on kids' behaviors.
McDonald's may be on the verge of a burger breakout. Global same-store sales jumped 2.4% in November, well above analysts' expectations of 0.17%. The premium cheddar bacon onion sandwich, along with dollar value menu items, appeal to recession-weary consumers still looking for good deals. One analyst predicts McDonald's to start 2013 flat, but pick up by mid-year.
At that point, we're going to start to see an acceleration because I think a lot of the current initiatives they have in terms of expanding the emphasis on the value menu and bringing new products to market, I think that's going to have a positive impact on same-store sales results.
McDonald's stock rose nearly 1% on the news to $89.35 a share. That bounce follows an October in which McDonald's U.S. sales slipped for the first time in 9 years and led to the resignation of company president Jan Fields.
Hewlett-Packard is suddenly jumping onto the hot stock list. Shares climbed as much as 4% during trading yesterday on speculation billionaire investor Carl Icahn is building a position in the tech giant. This year has been a rough run for HPQ. Shares have tumbled on troubles, including the $9 billion charge from its acquisition of Autonomy and concerns about its printer and PC businesses. Here's trader Alan Nuckman's thoughts on the stock.
Well, I think it may be overdone on the downside. You got to remember that Hewlett-Packard has done this twice. It dropped from $80 back down to $10 and then rose again, fell from $50 down to the current level we are now. So it does have some brand value. And it's just a matter of sorting out the company and making things work again. And I think this CEO could do this.
Hewlett-Packard stock is down nearly 75% since April of 2010. At current levels, Nuckman calls it a stock to buy now and hold for a year or two.
Barron's is naming its top 10 stock picks for 2013. Apple, JP Morgan Chase, and Royal Dutch Shell all made it onto the influential list of picks, joined by Barnes & Noble, BlackRock, General Dynamics, Marathon Petroleum, Novartis, Viacom, and Western Digital. Barron's has been bullish on several of these stocks this year, while others were determined to be undervalued.
It might be just the thing to get the whole world focused on fighting global warming. Pasta. Ubiquitous in almost every culture, pasta is one of the foods most in danger from warming global temperatures. It's made from wheat. That grain is considered the most susceptible to higher temperatures, drought, and flooding, all conditions that science says will accompany a warmer planet. Well, here's a look at today's economic calendar. Watch for the trade balance and wholesale inventory numbers. On the earnings calendar, it's Dollar General and Casey's General Stores. Still to come, what could become a few of your favorite things when looking for tax breaks this year. But first, find out why the plug was pulled on Circuit City. That's next with Bill Mahler after this in the Know Message.
Remember Circuit City? I mean, that business was big, starting out as a mom and pop for a number of years until the mid-90s, in fact. It was the best performing company on the Fortune 500. Well, 3 years ago, it went bust. So what happened after it was liquidated? Let's talk with Alan Wurtzel. He's the son of the pop who founded the little TV and appliance store in 1949. As a 52-year insider, including a stint as CEO, he's now written the book, Good to Great to Gone, the 60-year rise and fall of Circuit City. So, Mr. Wurtzel, what did happen?
Well, it happened in 4 stages. Between 95 and 2000, Best Buy, then the Walmart and the other merchants began catching up with us. We did not change our store format. And by the end of the decade, we were number 3. My successor's next successor understood there was a problem, but it would have required huge investment in remodeling stores and retraining salespeople, et cetera, changing the business strategy. He didn't have the fortitude, the courage, the vision to make these hard changes. He was afraid that Wall Street wouldn't understand and the price of the stock would collapse. He became discouraged and quit and put in as his successor somebody that didn't grow up in the business, came from Best Buy, brought in a whole new team of people, didn't understand the caring and respectful culture that Circuit City had with its employees and its suppliers. They fired 3,400 salespeople and crowed to the newspapers how much money they were saving, and in the process destroyed the morale and the culture of the company.
Well, let me ask you, this is the family business after all, and you're watching it before your eyes fall apart. Do you retain some bitterness about this in any way?
Well, I wouldn't say bitterness, but obviously disappointment.
Were you advising him? Did you see early on that those were mistakes that were being made? Because you were on the board, I think, until 2001.
Yes, I saw early on that we were losing ground to Best Buy and that we needed to change the store formats. And I spoke up, but my voice didn't persuade the then current CEO.
Well, what's the lesson here, do you think? You got to stay nimble, you got to stay productive and progressive, looking ahead. Are those the lessons for companies?
Well, the big lesson for Circuit City is you got to listen to the customer and see what the customer is doing. The customer was going to places like Best Buy and the mass merchants where you could pick it up, put it in a shopping cart, wheel it to the checkout stand. We insisted on staying with the old model where you had to talk to a salesman so that he could step you up to a more expensive product or an extended service policy.
Yeah, lessons learned. Alan Wurtzel, thank you so much.
Thanks, Bill. I've enjoyed this interview.
Thank you, Bill. Still ahead, how the wealthy are cutting down on what they pay in taxes and what it could do for your returns, too. That's next. While Oprah has a few of her favorite things to buy for Christmas, we have a few of the favorite tax deductions of the wealthy. Our tax man, David Eliashar of Horwich, Coleman, Love enjoys the sunset. Good to have you back on the show.
Thanks for having me.
Now, according to CNN Money, Gross earners or taxpayers bringing in $250,000 on average took deductions of $91,000 in 2010. Congress is about to potentially limit those deductions to maybe down to $50,000. But that means for this year, you can still take some pretty decent deductions, true?
Correct.
All right, so let's talk about some of the top deductions for the wealthy, starting with state and local income taxes.
State and local income taxes are nice for wealthier taxpayers because, of course, the more money you make, the more you're going to pay in state taxes. And depending on what state you live in, that could have an even more meaningful impact.
The wealthy also love a charitable deduction.
That's right. For wealthy taxpayers, one, they have more disposable income to make charitable contributions. And two, when you're in a higher tax bracket, that makes a more meaningful reduction in your tax burden. And the nice thing about charitable deductions is if you're a wealthy taxpayer, you can contribute appreciated property to your favorite charity and get the deduction for the fair market value of that property. And not only that, but you can avoid, if for example you bought a stock many years ago and it's appreciated in value, you can avoid paying the capital gains tax on the appreciated stock.
Another big one is a home mortgage interest tax deduction, and this could be great if you have a few homes perhaps.
That's right. It's a nice deduction for the wealthy because wealthier taxpayers may have their main home, but they may also have a second home. And so you can deduct the mortgage interest on loans up to $1 million and also up to $100,000 on a home equity line.
These are deductions just about everybody should be taking though, correct?
Correct. Everybody can take these deductions, and the deductions that we named today have a dollar for dollar impact on your income, so everybody should be on the lookout and taking these deductions on their tax return.
David Eliashar, always a pleasure. Thanks for coming on the show today.
Thanks for having me again.
A tax strategy helped save Google around $2 billion in 2011. Recent filings show that Google shifted $9.8 billion in revenue into a company in Bermuda. That's a country that is free of corporate income tax. While legal in the U.S., the tax strategies have angered European officials who argue that big companies, including Google and Starbucks, do not pay enough taxes abroad. Google says it follows all tax laws and helps create jobs and fuel investments overseas.
Thanks, Chuck. Up next, 2 ways traders are using GPS to potentially make money. Chart Talk is coming up. We have located Scott Bauer Trading Advantage to talk about a couple of stocks that might be in for major rallies, starting with Garmin, which makes GPS products, and Gap, which happens to trade under the ticker GPS. Good to have you on the show.
Good segue, Angie.
I thought it was pretty cute. Let's take a look at Garmin first, which makes the GPS. What do you see in the charts that you like here?
Well, after the announcement a couple weeks ago that it was being added to the S&P 500 index as of the close yesterday, we saw a pretty good appreciation in the stock. All these fund managers out there that track the S&P 500 and have their clients' money in funds, the S&P 500, they had to get into Garmin. So 42, which is really the level that it traded at up until yesterday, that's a pretty good resistance point. That's a pretty high point. I wouldn't be surprised if we saw it pull off just a bit, because now much of the buying pressure is taken out of the stock.
Interesting. And Gap, what's going on there?
Gap was the darling this whole entire year in the retail space, or one of them. I mean, we saw this stock really come out of nowhere, turn itself around, trade up into the high 30s, and then just at the end of last week and yesterday, boy, out of nowhere again, we saw this thing drop 15, almost 20%. Now, there's a couple schools of thought there, because there's not a lot of concrete news out there. One is, much like people are saying what's happening to Apple, investors are taking money off the table. They're taking their profits off the table that they've ridden up this year. Two, later in the week on Thursday, we're going to see the November retail sales report. And we're going to see maybe Gap's going to come in a little shy. Who knows? And three, there are some stories out there that there is some disappointment from investors and in the marketplace that Gap did not give their shareholders any sort of special dividend. But I think still in the long run, I think it's probably still, got some room to run to the upside.
Love having you on the show. Thanks as always, Scott Bauer, Trading Advantage.
Thanks, Angie.
It's time for us to be on our way for today. Coming up tomorrow, a Harvard-educated Mensa supermodel will be here with her inside views on the modeling industry. Don't miss it. From all of us at First Business, thank you for watching.